Well, hello everyone. Welcome to Building a Stock Portfolio. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab, and Kevin Horner is enjoying a day off, and so I'm filling in for him today. We have the fabulous Ben Watson, a riding shotgun in the chat. He's a friend and fellow coach, and has been looking at all things in the market since he was like knee high to a grasshopper. So he's got a lot of experience. If you're not following us on X, you are missing out. Ben's handle at Ben Watson CS, mine is at Barb Armstrong CS, and I encourage you to also look for us on LinkedIn. Now, we're going to talk about having balance today, or recognizing, somebody said to me the other day that they were looking at someone's portfolio and they were super heavily weighted in tech. And I said, well, they're just running where it's hot. And so when we look at having balance in a portfolio, we're going to have this conversation around, does that mean if there are 11 sectors, we should be equal weighted in every sector? And maybe not, but maybe we don't want to have all our eggs in one basket. And what's an easy way to see on Thinkorswim how much we have in a basket? So those are conversations that we're going to have today. We're going to play some example trades. And so let's get right down to it. Know that everything that we talk about in this class is for informational and educational purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. We will use the Paper Money software application on the Thinkorswim desktop platform. Say that 3 times fast. It's a brilliant place to learn. There are some nuances and differences, and I'll discuss those as appropriate. But just know that this is a great place to hone your skills and make sure you understand the platform and how it works in your trading plan and how that works before you consider trading in your live account. Okay. We are going to look at some dividend paying stocks today, and know that that's one of the differences between paper money and a live account, is that in paper money, they don't actually pay paper money dividends. And in a live account, even if a stock pays a dividend now, that's not a guarantee it will continue to do so. And if it decides not to do so, that can have a negative impact on the price of the stock quite often as well. So there we go. Okay. So know that in paper money, also another difference is that if we sell a covered call, for example, a short option will never be assigned early. In paper money, that can happen in a live account. Now, I just want to give you a heads up. This Thursday is the market overlook. And if you are here live, I posted a link to the registration for that. It's this Thursday, June 25th at 7 o'clock Eastern. So that'll be 5 o'clock Mountain. Yeah, and it's 1 hour. It'll be jam-packed and well worth your while. So you may want to tune into that if you can add that to your schedule. Okay, so let's go out to the platform and start our conversation. So here's the S&P 500. It's up 7.6% year to date. If we want to, I've got a 1-year chart, and if you want to not have to draw the lines, if we come down to show price as a percentage, and I've just clicked this icon under patterns, this one here, we can see that even with the 1.4% pullback today, in the last 12 months, this index is up over 20%. And when I look at the last 30 years, because I recorded a 10-minute thing on the power of compounding, the S&P on average has returned over the last 30 years about 10.6% a year. So, this last 12 months is double that. And the NASDAQ's returned about 13. And when we look at the NASDAQ, even though today it got clobbered, it was down 3%, it's still up 34% in the last year. So not quite triple what the average is. The triple would be 39 or 40. But pretty heady stuff, and it's up 16% year to date. We're in the middle of June, and if on average this index has returned around 13 in the last 30 years, I mean, that's still extraordinary. So we're seeing this inverted hammer candle. And this could say like, hey, we're reaching, this could be finding support here. We draw a line here. It's broken below that. Today it closed below that. So, here's the next support level. And what may concern some people about this is that, we've got a bit of a potential, it's not here, but a potential head and shoulders pattern. And that's kind of one of those oh no patterns. Oh no, Geronimo, because if it breaks below here, then, you'd measure that move and the expectation could be that it could move this far down, however far that might be. Okay, but we don't even have that pattern generated yet. So this could be Chicken Little, making everybody nervous unnecessarily, because when you've had this big a move, and this is not a trivial move, it was like 0.5% a day, like over 20%. So this was a 34% move in 46 days from top to bottom. And, even if we come over here, a 28.5% move in 59 days, including this consolidation. Now, we were talking about how technical analysis is in the eye of the beholder, and I don't want to spend a ton of time on this today, but others might see a bit of a panic pattern maybe setting up. And, if it breaks to the upside, then the uptrend continues, because we have a low here, we have a higher low here. So it may be taking a bit of a nosedive, as Jay is saying. With the SPX, somebody asked me what kind of candle. That's an inverted hammer. And so, if you're not familiar with some of these candle pattern configurations, I created so far 13 short videos on candle patterns. And so they're in the trade management mini session block. So you can go and pretty easily find those. So you'll want to subscribe to the channel if you haven't done that already. But if you go to Trader Talks, I've got all these short videos, and you're welcome to tap into those. I mean, that's why I created them. And they're in the getting started with technical analysis, but I put them all in one nice group. Actually, the people that work behind the scenes, put them into a really nice group. So if you come to this trade management mini session, they're right at the top here, 13. And some of them are like 2 minutes long to 5 minutes long. So what is an inverted hammer? And we're seeing a lot of those on the charts today. Okay. Okay. I like Riceberg. I like your, it's like, remember I was watching Shakespeare in Love with I had two boys that were taking Romeo and Juliet in high school. And so we were watching this movie, but my youngest son, who at that time was 11, there were a couple of scenes that he really didn't need to see. And it's like, Cam, you can cover your eyes now. And he went like this. It's like, Cam, I don't think that's doing the trick. And it's like, yeah, man's got to see what a man's got to see. It's like, well, you're 11, you don't got to see that. In any event, don't be afraid to look, because we can only make informed decisions if we can see what's coming, right? But here's what I want to say about that. So let's look at the sectors. So when we look at the sectors, like Chicken Little is not out running around the yard right now. So when we look at the sectors today, we had 1, 2, 3, 4, 5 that finished in red, which means we had 6 that finished in the green. Healthcare was up today. Staples was up today. Energy was up today. If we come to the Market Watch tab and we look at the NASDAQ, and the NASDAQ got hit the hardest, but consumer staples, there wasn't no red in the bed. Healthcare, IDEX was down a smidge, but everything else was up. Industrials, we had ODFL was down a little bit, but pretty much everything else was looking pretty green. But half of this sector is technology, and Micron got clobbered, AMAT got clobbered, AMD. Like, and these are heavy hitters. Even Nvidia was down 4%. And, and Tesla, down 6%. So a lot of these big boys were down, and that's what, dragged the index down. Like if we come and we look at the S&P, most of the red is where? In the tech sector. And so, that had a pull, but look at consumer staples. Every energy stock that's in the S&P was pretty much up today. We had a couple that were neutral. So Valero was down just a smidge. Consumer staples were up, real estate, utilities. And then if we come to the, index watch and we say, well, let's put in the NASDAQ, like we had 55 down, and 45 up. And if we look at the S&P, I bet you the ratio is even a little stronger. So we had over half, 284 of, the 500 were 496, 212 down. And some were up, pretty nicely. And so, we tend to focus, what they say, good news is no news. So don't just focus on the bad news. So let's come and look at our example portfolio. And I know that I don't normally teach this class, but one of the things, I thought would be interesting to talk about would be if we look at the positions in this portfolio that are stock positions that are kind of more buy and hold. I added the sector. So if you don't have sector, you can come to this sprocket at the size of that side of the group and just type in sector and then add it. Now I've already added it, so I'm not going to add it again, but you'd say add and then okay. So we're just going to leave that as is, but we've got one consumer discretionary, one tech, one healthcare, and then a healthcare and a consumer staples. So if we come and look at these sectors, and this is just a public watch list, we've come to public S&P sector indices, said, okay, well, who's been crushing it over the last 3 months? And this is something like in that trade management mini session folder, if you scroll to the bottom, if you don't have these scripts, I did a little video on how to add scripts. You can go and get those there. They're also in the post pinned to the top of my X feed. But technology has been crushing it. Today, not so much. Like, today, obviously, down almost 4%. So that's kind of humbling. But real estate's been on the rise, and industrials, and then financials. And we see this, when we look at patterns, this cup and handle pattern. But if you're saying, well, could some money, because technology's been on such a tear, could there be some rotation happening? Well, I like the way you're thinking. And the answer is it would appear so, because all of a sudden industrials it has been the strongest sector in the last month, followed by financials. And, when we come and we look at this is, we could put this in a textbook beside cup and handle patterns. So, we've had this, it came down and then came down again. And so here's our cup, here's our handle. And then we had a breakout and it kind of pulled back for a couple of days, not uncommon. Sometimes it'll come right back, to this old level from which it broke out, old ceiling, old resistance becoming new support, and is moving to the upside today. So could we, add some stocks in the financial sector? When we look at the healthcare sector, we've got opportunities also, and here now, and this pattern like took about 3 months to set up, but we call this a double bottom pattern. And so for a while, a lot of people weren't paying too much attention because these were kind of getting hammer smashed. And meanwhile, some of the high flyers in tech were really crushing it. So why would we want to be over here with, the double bottom brigade? But, it broke out, it came back, it retested, bounced off this 30-day and is back above the line. So there could be some opportunities in healthcare. And then if we come and we look at, yeah, technology has been crushing it, and today it got crushed. And so if we wanted to do, let's say we wanted to look at something in the financial sector, what is a quick way to find financial stocks that are heavily traded? Well, we could come over here to the scan tab and we could say, okay, we want to look at all stocks that, well, actually, we don't want to look at all stocks. Let's just pick stocks that are part of the S&P that are also part of the financial sector. And, we don't care which industry group, just select all financials. And we're going to run that scan. We've got 73 stocks because this says just show 50. We're going to say like show all of them. So, we've run that scan. If we want to save it so we can bring it over to the watch list, we're going to come over here and say save it. And we're going to call this sector financials. Okay, now I've already created one, but you would just hit save. Now, the advantage of saving the scan, is what? Well, when you come over here to your watch list and then come to personal, because you've now created a watch list, you'll see this little dartboard or bullseye. And so you can come down here and click on financials, and the S&P 500 sometimes will add new companies and kick some out or wave farewell. And so this will bring you the most current list. It'll run the search. And so I've just sorted these alphabetically. Well, you can click to sort them alphabetically. And then you can link your chart and your trade tab and your monitor tab. You can link them all together so that as you go from one to the other, you can see which ones are kind of coming around. So here we're seeing another kind of cup and handle pattern like we saw on the overall index. So is that a surprise? No, we can probably expect to see quite a few of those. American Express, cup and handle, broke out, started to pull back. And here today it was down along with the rest of the market, but it's kind of flirting with this breakout level. So we might just want to wait until we see if it continues to move. Here, another cup and handle pattern, and it's breaking out. And so some people, they are fundamentalists and they'll want to look under the hood and look at the fundamentals first. Other investors like to start with the charts. And then if they find something that looks interesting on the charts, then they'll go and have a look and maybe add it, and then they'll start looking under the hood. Okay. So let me just, okay, I just don't want to get timed out on something over on this other screen because I want to bring it over for us. Okay. So yeah, Citigroup, we actually added to our portfolio in the Getting Started with Technical Analysis class. And so here's a financial stock that even though a lot of things were really consolidating, and this did pull back. And if you owned this stock, this would have been a painful thing to participate in perhaps, but it came up and hit a new high, new high, higher lows here, and is continuing to move to the upside. I'm not going to choose that as an example because we just did that in the other class that I taught at 2 o'clock Eastern. So Chubb still consolidating. CBOE not joining along with the rest of the group, but you see how quickly we can click through these. And then we get to Citizens Financial Group. And if we come to our trade tab, we can see that this has a PE ratio of 16.3. Now, if you're a value investor, some value investors might say they're looking for a stock that has a price earnings ratio of under 20. So what does that even mean? What it means is, like in this case, for every $16 you invest in Citizens Financial Group, this company generates a dollar worth of product, a dollar worth of profit, as opposed to, say, a Tesla, where you have to invest $350 to generate a dollar worth of profit. And this one pays no dividends. So if we come back to, sorry, CFG, I'm just doing this, but this isn't really apples to apples. Tesla's still much more of a growth stock. This one also pays a dividend yield of, 2.67%. And so if we look at that, sorry, I was just going to close that to make it less distracting. And, again, in paper money, we don't get paid paper money dividends, and there isn't a guarantee that dividends will continue to be paid. But these dividends are paid quarterly, and some people will look at this as a way of supplementing income, or they'll just reinvest those dividends and kind of plow it into their growth. But we did have this breakout. It came back to retest and continuing to move to the upside and hitting a new high today. And, I don't know if that's an all-time high, but, some people would say, well, why would I invest in this? It's at a new high. Well, if we looked at a lot of stocks over the last year, we wish we'd invested in them when they hit a new high for that stock 6 months or 8 months ago, because they're up another 200% since then. And that isn't saying that this will be the case here, but what it is telling us is that we've got some momentum. And so if we were, and then if we come to our Analyze tab, if we wanted to do some more research, we can click on these different analyst reports and see what they have to say. If you're not familiar with this company, you can take a look at, what they're doing. We can look at their trends over the last 5 years, and it looks like they struggled for a couple of years. And then last year, their earnings per share was up 27%. Their sales were up. One thing that some people like to look at is this dividend payout. How much of their profit are they having to pay out? Because if this number is really high, it may mean that paying out the dividend that they are may not be sustainable, or maybe harder to sustain. Okay. And so coming down and looking at this dividend payout as a percentage, let me just see if this will, at 45, that's some might consider that to be healthy. So if we wanted to add shares, if we come to the trade tab and we say, well, we could have our position size, we want it to be no more than, say, 25,000. So we could take our 25,000 divided by our 68.99. We could buy 362 shares. Now, if you wanted the ability to maybe sell a covered call, or let me just come down here, or buy a protective put over earnings or something like that, you may want to buy a round number, 100 lot. So you may say, well, I'm going to buy 300 shares then. And the options here are pretty heavily traded. We have 4,500 contracts. We have over 1,000 contracts. So if we did want to sell a covered call if it started going sideways, or buy a protective put, that would be a choice available to us. So because of that, we're going to buy our 300 shares. And then when it comes to a stop, we might say, well, I see this $66 level being a potential support level, because it's come down and hung out here for a bit. So I'm going to take that 66 and multiply that by 0.97, and we're going to put our first stop at 64.02. What do I mean by first stop? Well, I mean that this is going to be our initial stop. And if the stock continues to go up, then over time, we may well want to move that stop up. And we're going to put this in our dividend stock group, stocks with dividends. Yeah. And when we look at this, we don't have any other stocks in the financial space. And so we might say, well, maybe we keep on looking. And maybe there's another stock in this space that might be appealing. And so we go back to our charts. So here is Cincinnati Financial. And it, like so many of the other stocks in this sector, were consolidating. And this one I've drawn a pennant pattern on. Now, some in technical analysis, it's kind of like a Rorschach test. Sometimes we see different things. And that's actually a straight line. It looks like it's slanting, doesn't it? But we had this, consolidation here, one way or the other, and it's broken out, came back to retest and moving to the upside. So, we've got a possibility there. I keep thinking of this as Fitbit, but it's Fifth Third Bancorp. And we had a cup and handle and it broke out, came back to retest. And today the market may have been down overall, but Fifth Third Bank was up 2%. And you may say, well, that's, a pretty big move. Do I want to look for something that's maybe just starting to bounce? And we could, but we bought this in one of our other classes when it was basically, pretty close to the same price. So it's not like you've totally missed the move here. And a technician would say, if this has gone from 43 to 51, what an investor might expect is for it to move. So that's 43.78, say about $8 to 59.48 to move up to about here. So there's, a lot of room for movement here. And if you say, well, that's only $5 and change, like, or $5-ish, well, that's 10% on a $50 stock or close to it. Like, that's not bad if you wanted to do a stock trade and put a target on it. So like with some, you may want to do a longer term buy and hold. And this one, does it have a price earnings ratio that's under 20? It does. What about a dividend? Well, it currently pays a dividend of 2.9%. Are the options heavily traded? Well, we have thousands of contracts here on this call, hundreds of contracts on the July put. So could we use options to protect our position? Potentially, we could. And could we decide that we just wanted to add this to our portfolio? Now, in the previous class, I think it was trading a smaller account, we bought it and sold a covered call at 55 with the goal of being called out. So we were just looking to make a short-term gain. But if we wanted to just add this to our portfolio, that would be a possibility. We could look at Goldman Sachs. And this one, it was consolidating, but broke out, took off, and then one would argue this is a bull flag, came back. And today, so one of your guidelines may be with this bull flag type pattern is that you're looking for a close above the high of the low day, which we would have had here on this one. And if this is pulling back, we may want to enter if this is our low day when it goes above that. So we could put in a conditional order. Now, this is a very expensive stock. It's over $1,000. So if you have a smaller account, you may not be able to buy this. Like in our trading a smaller account, we could buy 4 shares because our max position size is 5,000. Even with this one, if our max position size is 25,000, we could buy what, 24 shares? 23? Not very many. which means the opportunity to use options to protect it, wouldn't be viable because it's a little out of our snack bracket. Could we look at JP Morgan? Sure. I'm sure it's on this list. And this is this inverted head and shoulders pattern. And then it broke out. Oops. And little pullback, moving to the upside today. And this one is, we may not be able to buy 100 shares, but we could buy a lot more than we could of Goldman Sachs. And then what about Morgan Stanley? When we're looking at these heavy hitters in this industry group, again, we had that period of consolidation, broke out, came back. Today, coming back, not bouncing quite like the others. So let's say we wanted to add JP Morgan, like let's just make sure we don't have it in here. We don't. It was JP Morgan, right? So if we look at JP Morgan, and here 282 to 317, 317 minus 282. So we'd expect about a 35-point move. Before it might pull back and then move again. Now, another way, if you wanted to do a shorter term trade, so somebody's asking, is this a bullish engulfing? Well, this candle here was a bearish engulfing because this candle engulfed the candle of the day before. Then we had a Harami pattern here, which was an inside day, which would be considered bullish. And then today was bullish engulfing. So you're absolutely right. Somebody's got a handle on their candlestick patterns. Yeah, and that's considered to be a complete pattern, a bullish engulfing pattern. So you don't have to wait then for a close above the high of the low day. So if we wanted to add JP Morgan and just do it as a trend trading stock, if we come to our trade tab, even in spite of the fact that it's a $334 stock, it has a price earnings ratio of 16, and it does pay a dividend of 1.8%. And so, we could come and say, well, 25,000 divided by our 334, we could buy 75 shares. And where might we put a stop? Well, we might, if we're trying to give this room to breathe, come back to this 318-ish level. So we're going to buy 75 shares. We're going to come back to that 318 and maybe put a stop 2% below that. It would be 311.64. And so we are risking, well, it will tell us minus 334. We're risking $22 a share. And so that may impact how many shares you can buy, depending on what your position sizing rule is. So we're going to come to our trade tab. We're going to right click. We're going to buy custom with a stop. We are going to buy, I thought I wrote it down, 65 shares. Was it? Let's see. We'll try that. We're going to put our stop at 311.64. So 22.66 is what we're risking per share. Oh, this is 20. So it must have been 75 shares. You could buy. So there's our 25,000. So if I take that times 75, so we're risking $1,600. Now, a stop loss doesn't guarantee that we'll get out at exactly that price. But what it does do is it gives us an exit. So, but if the stock were to gap down, we could end up losing more. But um, our rule of thumb or our position sizing rule is we don't want to risk more than $2,500. And so chances are strong that we get out before we'd lost more than that. So we're going to tee up JP Morgan also. Now, let's say, we're looking at our positions and we don't have anything really in industrials either, and industrials has been strong. We have 2 in healthcare, but if we wanted to look at healthcare, we could do the same thing, right? We could come over here, create a scan and say, well, instead of intersecting with financials, let's go and intersect with healthcare or with industrials. Run our scan, save it, which is the second group, and just save as sector healthcare. Now, like, as you could see, I've already done that. It probably only took me like 15 minutes to set these up. And now we're in the healthcare. Oh, we're going to look at industrials. So, and again, like, we don't have time to go through these, another group. And we have added 2 positions to our account. But again, by linking our watch list, by turning this into one, linking our trade tab, linking our analyze tab, and linking our chart, we can very quickly go through a lot of information. And that's, a pretty cool thing to be able to do. And so, you can I tend to sort them alphabetically just so that I can make sure I get to see them all, is the reason I do that. Rather than by sorting the ones that are up the most. Now, the market's closed, so we could sort by, which one was up the most today, but you can see it doesn't mean which one has the strongest uptrend. It just means which one was up the highest number today. And that was Axon Enterprises, but it's actually a downtrending stock. And so is Lockheed Martin. And L3Harris Technologies. So I don't find that sorting them that way necessarily helps me get where I want to go. But so if I sort this way, I can come and cherry pick, because I know we looked at Delta. So oil prices have been coming down. And so what's that mean for heavy users of oil and refined oil products like gas, which, the airlines use a ton of, is that they've had a very favorable response and are breaking out to the upside. And, so if we look at those, Alaska, similar, we had a big double bottom or cup and handle, broke out, came back to retest. United Airlines. Like, are we seeing a similar theme here? Love breaking out. I know the CEO of Southwest Airline would love for us all to say all we need is love, right? But we've got either, some might just call it a basing pattern. I like to play I Spy with my little eye. I see kind of a double bottom or a cup and handle. How we measure these is going to be the same. It's about an $8 range. And an $8 range on a $45 stock is kind of huge. So 44, that would take us up to about 52. And it's well on its way, isn't it? So I hope this has given you some ideas on just how you can use this. And so, like, the key points, it's like, if you're not sure, and instead of having to go and look every single one up, you can come to your monitor tab, add sectors, and very quickly see where you have concentration and where you have some gaping holes. And today we made an attempt to fill a hole in financials and then started to look at industrials. The other thing that we were talking about was honoring our position size, how to create a very quick scan and save, sector watch lists by industry group so that we can very quickly, if we want to, invest rotationally in a stock and look at a specific industry group, it's very easy to do that. So Kevin will be back next week. I thank you for humoring me today. I thank you for all your questions. If you could hit the like button, it helps move this up in the algorithm so more people can find this content. If you'd subscribe to the channel, that would be pretty awesome as well. If you haven't done that already, 200,000 people and growing, can't be wrong, right? And then follow Ben and I in the land of X, Ben Watson CS, Barb Armstrong CS. Go over and find us also in the land of LinkedIn, and then reach out and say hi. We'd be happy to hear from you. So guys, take care. Have a great evening. We'll be back in the morning with Trader Talks with Kevin Horner and Brent Moores. We'll see you then. Thanks to Ben for helping in the chat and the guys behind the scenes for all they do to help bring these webcasts to life. Take care. Bye.